Mr. Guerrilla Economist, welcome to the Hagman and Hagman Report tonight.
It's great to be here, guys. It's once again an exciting time to be alive. Earlier, Steve was right. I mean, earlier I sent Steve an email, said, "Hey, Steve, I'm totally freaking out over here." Even before I go into that, I just want to thank all the people that emailed me and reached out to me and was able to consult with me this week. And I was able to give them some good advice and consult with them. And I just want to let all of you know that I've spoken with the ones that I've spoken with, that I'm praying for you, and I'm praying that the Lord will give you the courage to make the right decisions, because the time is of the essence. And once again, anybody can reach me through stevequill.com. Also, you can reach me on my email, which is gorillaeconomist@gmail.com. We can connect that way, and I will try my level best to help you through and guide you through this, through the coming storms. That being said, back to the freakout thing. I just basically got this hot off the press and hot from the boardrooms over here. Guys, the Japanese, and this is official. You can, I'm going out on a limb saying this, and you can take it for all it's worth. And this is the God honest truth. The Japanese have lost control of their bond market. Once again, I'll repeat it. The Japanese have lost control of their bond market. They have totally lost it, okay? The next few days... you got her.
V for financial neophytes like me. What does that mean?
What that simply means is when... See, the stock market has been rising in Japan and as well as over here because of bond prices. We're in a very unique environment where if the bond market goes bust, you're going to see the Nikkei go bust with it, as well as real estate. So that also coincides with us. The collapse that's going to occur here is going to be a trifecta of bonds, stocks, and real estate combined. So when the Japanese have lost control of their bond market and the yields are getting higher and higher and the interest rates are starting to climb on it, nobody's buying it. So the Japanese, right now the Bank of Japan has ordered all the public pension funds to begin to buy the Japanese debt. Okay? I've had an emailed question where somebody emailed me and said, what is the Fed doing? Because the Fed's, buying $45 billion in mortgage-backed securities. There's also another $45 billion that they're spending out, and that's going to God knows how many different sources. I'm sure some of it is going to Japan, but I know most of it is going to the Eurozone to try to stabilize the banks over there. But the Fed over here has also ordered, and I want everybody to listen, this is insider information, the Fed has ordered the U.S. pension funds to begin to acquire U.S. debt. That order is coming down the pike. It's going to start happening. The states are going to start carrying it in order to fatten up their books. So we are moving into the last stages before an all-out collapse, and that's exactly where we're headed. So now the Rubicon has been crossed. And when I was on back on May 14th, I said that. Now the armies are surrounding the capital itself. So we're at a very, very critical juncture, and that's the thing that's gotten me freaked out the most, is that the Japanese have lost control. They don't know what to do at this point. To the public, they're telling the public, don't worry, everything's okay. That is a sign, folks, that they are panicking. That is a sign that everything is not okay. That there is a great fear and trepidation that has begun. And when this thing goes bust, this is the trigger that's going to bring this whole thing down. And that's what I'm afraid of.
V, I was talking with my source, my intelligence source, insider source before the program, and he said that Japan was instrumental. They used Japan to actually, as a catalyst to bring down the economy of the Soviet Union back in the 80s. And I'm not sure if that has anything to do with what we're referring to, what we're talking about now. But it's all basically what he said. It's all a shell game, and there's no recovering from this, and there's no walking this back. So you're painting a very dire picture here. So from your first appearance on January 11th, when you said Japan was going to be is the coal mine, not just the canary, but the coal mine. Now you're saying Japan is essentially totally gone down, and to top everything off, the U.S. Or the Fed has ordered U.S. pension funds to acquire U.S. debt. We're at the end stages, aren't we?
Yeah, we're on the last legs of this whole story book, and unfortunately, it's not going to be a storybook ending. So we're in the last few pages of the chapter that's been written about 100 years ago, and it's soon coming to an end. So, so the world is brave. So now the question becomes, what exactly are they going to do? They're going to bring this thing to a halt. They're going to create an economic turmoil and a crash. And then they're going to sell the population on some sort of an armed conflagration, some sort of a massive global war. That is typically the playbook of the globalist. That is typically what we see, a pattern that's repeated often. So I think that's where we're being pushed to. Because they feel that, this is no longer, look, a small-scale controlled regional war is not going to fix a 1.5 quadrillion derivative debt globally. A small-scale regional war is not going to fix the massive levels of unemployment in America, in Europe, in Japan. It's not going to fix the economic problems that have festered in much of the Western world and parts of the world that utilize a Western style of banking. It's not going to fix it this time. So what is going to happen is they need to get all the players onto the field. And they need to set off a scrimmage that's going to be so massive and so incredible that everybody involved is going to be affected. And those that are not involved are going to be affected as well. So this time, they're going to drag everybody in. This time, there's not going to be anyone that's going to be unaffected. And that's what, typically happens when a scenario like this is played out. So, we have a country that has lost. Basically, it's losing its control. How many stopgaps, how many fail-safes were triggered in the last week alone? 3, 4? How fast did the Nikkei went down? Like 1,500 points in a matter of minutes. When you look at this chart, you'll see nothing but a nosedive. This is scary, folks. This is not everything's okay. And what are they doing over here? They're giving you guys the message that everything's fine, everything's okay. Look, the stock market is going to go up. It's going to go up even higher. Folks, if you are still in paper, if you're still in equities, if you're still waiting on the fence, okay, that somehow this is going to get pulled back, let me tell you right now, it is mathematically impossible to pull this back. It's mathematically impossible. You cannot recall this. This cannot be recalled. So what's happening is that this is accelerating. We have been strapped to a rocket ship, and it's being launched off a cliff, and there's no stopping it, and it's hitting right for a wall. Forget a wall, we're going to hit a mountain, and that mountain is going to bring this whole thing to a kibosh. It's game over. There's nothing left to play. See, I remember the time, decades ago, when the banksters, okay, when the guys in the boardrooms would begin to create a bubble. They create a bubble, they'll pop it, they'll get the suckers in, they'll fleece the suckers for all they're worth, and then a decade later they'll start another bubble, because this way they give it time. They give it time for the suckers to settle down. And like a bunch of heroin addicts, the suckers come again, tapping their arm, tapping their vein, and telling the banksters, oh, let me get one more hit. Let me get one more hit of that equity fund. Let me get one more hit of that stock. Let me buy into that .com. Let me get into that subprime mortgage. Oh, I'm going to get rich. I'm going to be like a Rockefeller. And once again, they got you. And then they pop it again. Folks, now things are so severe, they're not even waiting. They're not even waiting to create, they're not even waiting a decade to create another bubble. They've created multiple bubbles, one after the other, after the other, after the other. Okay, and the biggest bubble of them all is that they inflated it to such a massive extent is the United States dollar. And this thing is popping. And I've talked to people this week that have money in equities, money in municipal funds, money in stock market funds with blue chip companies. Let me tell you something. I've had traders email me and saying, hey, you know, why is this market going up? It doesn't make any sense. Well, I'll tell you why it doesn't make any sense. The only reason why the Dow is where it's at, and I called it before anybody else did, the only reason why the Dow is where it's at is simply because all you have is corporations buying and selling their own stocks. Did you hear that, folks? Corporations buying and selling their own stocks. They're not investing. What is a sign of a corporation that's investing? Simple. They're hiring employees. They're creating new divisions. They're opening new departments. You don't see that. There's no investment. Otherwise, the unemployment rate wouldn't be the 23 to 24% of where it's sitting right now. So this is the charade that's being played. So you're given the illusion so you can go in, led by these Judas goats, led to the very maws, the very jaws and mouths of the jackals to be ripped limb from limb. And I'm telling you right now, folks, the time is short. The time is very short. You know, I had people ask me, can I leave the country? Some people can. If you've already got stuff in other countries right now, I'm telling you right now, if you are already set up in another country where you have assets in that country, you have residency in that country, you have a passport in that country, by all means go. That's us here. You heard it here. I'm telling you right now, go. If you haven't, okay, and I'm telling you right, that's one of the saddest things about being an American citizen. It is so difficult for you to expatriate yourself. It is so difficult for you to leave without all sorts of stipulations and all sorts of things, looking at everything. They're right now passing laws to hit you with different types of taxes, penalties, just for you to leave. Sounds like Nazi Germany, what the Germans did to the Jews when the Jews were trying to get out of Germany before the whole thing went up in flames. It's the same program. These globalists don't change. History just doesn't repeat itself, folks. History rhymes. It rhymes. And here we are again, looking into the abyss, into the financial abyss. And that's where we are today. I'm telling you right now, I was talking to people, hey, do you know any bullion buyers? I can't get any gold. I'm telling you right now, folks, if you can hear it within an earshot of my voice, if you can't get gold, if you can't get silver, for the love of God, call Renaissance Metals. Call Steve Quayle. Steve's one of the only guys. And I'm not telling you this because he's a friend of mine. I'm telling you this because I know dealers here in New York where I myself am put on a wait list for 2, 3, 4, 5 weeks. Okay? Give Steve a call. There's still a chance for you to go out there and get some gold, get some silver, and when you call Renaissance Metals, tell them V sent you. They'll take care of you. I promise you that. Okay? Now let me tell you some great news over here. Another bit of incredible news. Another sign of the times, so to speak. A few days ago, the Royal Canadian Mint, all right, they minted a coin, a silver coin, 1 ounce. Okay, a 1 ounce silver coin, and they put a $100 face value. They stamped it right onto the face. And then when you go online and you read about this coin, it says all the investors, they think it's such an incredible bargain. In fact, folks, it was such an incredible bargain that they minted 250,000 coins, and in a matter of a day or two, 97% of the coins are already sold out. What does that tell you? Well, number one, that there is such a demand for physical silver that people are willing to pay a $100 for a silver coin. Number two, the Royal Canadian Mint stamped that coin with a $100 face value. Folks, I'm giving you a little bit of information here. The Canadian Mint is forecasting something that many of us already know. That silver today, if it was released from some of its manipulations, should be at $75 to $100 an ounce right now. I'll repeat that again. If silver is released right now from some of the manipulations that have affected it through the ETF and papers market and futures contracts markets, silver would be worth anywhere between $75 to $100 an ounce. The Canadians know that. They're not stupid. They stamped it with 100, and it's sold out in days, folks. Last year, they did the same thing, but they put a $20 stamping on a polar bear commemorative coin, and that thing sold out, but not as fast as this. So when I tell you that silver and gold is getting rarer and harder to get, let me tell you something. It is. Okay? Now, the silver and gold suppression. Now, I had it from some of my sources that the plan is to take the Dow higher. Okay, now, I don't know where things are going to go now, and I take this with a grain of salt as well. But the plan is to suppress silver and gold even further. They want to take gold down to 1,000 and silver anywhere between 16 and 18. Folks, that's going to do two things. If they do that, if they have the cojones to do that, it's going to do two things. Number one, it's going to permanently divorce. It's going to permanently separate. It's going to permanently dislocate the paper market from the physical market. It's going to be a permanent severing, all right? Because I'll tell you right now, if silver goes down to $18 an ounce and the supplies and the acquisition premiums have gotten up so much higher, do you think for 1 second that if I'm holding an ounce of silver, I'm going to give it to you for $18? No. Acquisition premiums are getting so high that, you know what? It's going to cost you $40. Folks, let me tell you something. Silver's sitting at what, $22, $23 an ounce? I just contacted the biggest bullion dealer in India. Okay? The guy's not letting go of silver for no less than $28 on spot. $28. Okay, so this is what's happening. All right? So what the banksters are doing is essentially in effect what the Department of Homeland Security did with the ammo purchases. They purchased up a pool of ammunition which drove up the premium of cost for certain types of rounds, and which created artificial scarcity within the marketplace, to the point that police departments have to ask civilians, may I please buy some rounds? That's the same thing they're doing here. They're creating such a vacuum in the marketplace, they are driving the speculators out. The speculators who don't know any better, because they're speculators, they're just looking for that one time. Look, let me tell you something about speculators. As an analyst, as an economist, we've always looked at speculators as the junkies. They're like the rave crowd. They're just looking for making a quick buck and moving on. They have no type of future. Most of them don't have any type of future vision whatsoever. They have no long-term insight, none of that. Quick buck here and now. So this suppression of precious metals has driven all of the speculators out. These jokers will be back. But when they do come back, folks, I'm going to tell you right now, they're going to be coming back in at a very high price. And that's where we are today. Steve, you can go ahead if you want to say something.
If I can ask you a couple of questions, B. Number one, and if you know this, fine, it's just an estimate. How many, what percentage of the American households do you believe have any significant holdings, physical holdings, like in their sock drawer or in a house safe or wherever, of physical gold or physical silver? What percentage-wise?
Probably less than 1%.
All right.
Maybe 1 to 3% at the most.
Okay. All right. Who's got all the silver and gold? I mean, just the other, or just a very small percentage of consumers, or is it the central banks, or who's got all the silver and gold?
Well, that's divvied up between the central banks, the bullion banks, the sovereign governments, and then every other country in the world where the populace is smart enough to buy hordes and hordes of silver. And you'll see that silver and gold purchases going through the roof in places like India and China, where people understand that, that real wealth is not something that's put on paper. Real wealth is something that's stamped in metal.
Okay. Steve?
Doug, I'd like to add, too, that India is probably the largest importer of silver. Obviously, people had just go to the basic CIA fact book or just type in and see what the populations of both India and China are. We've seen the Russian central bank. We've seen the Chinese central bank purchasing massive amounts of gold and silver. By the way, gold alone, Russia's got close to 9,000 tons. The true holdings of China, told to me by a Chinese insider married to a very prominent member of the party, most people don't even know enough of China's history to remember Kublai Khan, Genghis Khan, all the different dynasties, the Ming dynasty. They literally have some of the largest holdings of what I would call historic treasure that most in the West have not seen. Now, there are people who are from the West that have seen it, and fortunately the gentleman that's my source is one of those. But the point is that they're smart, and I've said this, and I'm just quoting it, I didn't make the statement up, but gold and silver always move from weak hands to strong arms. What V had written in one of his write-ups is, look, this is the force out of the little guys into the mouths of the jackals. And, all one has to do is watch how a hyena and a jackal hunt to figure out it must be the predatory mascot of the Illuminati. They love them. And by the way, it's fascinating that the people that yelp the loudest, whether they're the talking heads on TV, whether they're spouting the liquid vomit that flows from mainstream financial presidents. Look, everybody has got to understand, point blank, that the people that are picking your pockets are the ones that are producing the shows with their various and assorted experts. And it's fascinating to me that while they're telling you, don't buy silver and gold, they're buying it. Now, why are we saying that? Listen, let me make it simple, especially for the Christians who keep saying to me they'll throw their gold and silver in the streets. Yes, they will during the day of the Lord, because it won't save them. But the book of Daniel teaches, and this is critical, that the Antichrist still basically has an economy that's founded on gold and silver and precious stones. So what V's going to talk about, too, and V probably want to get to this in the second hour, but the ancillary system that's already set up, the biometric tracking, and I love this word, the ubiquitous, and it means ever-present financial system that's going to be there. You're going to be assigned a specific amount of units. You're going to be told where you can go, where you can work, what you can do, when you can travel, where you can travel, and it is the quintessential locking grid that's coming. Now, again, I'm going to yield it back to V because he worked on that. He knows the people that developed it. So for all of you critics and cynics out there who sit in your armchairs, you've never made a trade in your life over probably $100, $1,000, or $10,000. We're talking about guys that can take puts and calls, and they can put them into the billions by compound leveraging. And unfortunately, the two biggest people doing that right now are J.P. Morgan and Goldman Sachs. So, V, would you set everyone into the understanding of the framework that exists to control them outside of having any personal control over their own financial destiny? And don't name any names or any companies, obviously, for their sakes.